Welcome back everyone to the Money Control live stream. You're watching Markets with Santo and CJ. Well, it's been a weak session through and through. There was no chance for the bulls it seems today, but if you look at it, the dominant theme was profit booking the entire session. If you look at the Nifty and Sensex, they're headed for their first week closing in after I think 5 sessions now, Santo, of spectacular gains that we have seen. But the surprising story of the day is the fact that small cap and mid caps have been underperforming the large cap. In fact, they were the ones who have been outperforming for the past few sessions, if you remember. So clearly, the surprising trend that we are seeing today is a bit of probably more profit booking on the smaller cap and the mid cap stocks today. And in general, you are seeing hints of traders taking some bit of short positions in the market ahead of the critical event of the RBI policy, which will happen on Friday.
Well, I don't think, CJ, there is anything negative expected at the RBI policy. The RBI will, the MPC will hike rates. That's almost a given now, and it's unlikely to be anything more than 50 bips. In fact, between 35 and 50 is
the expectation,
the general expectations. And also, what has changed over the last few days is also renewed buying interest from FPIs, and that has really provided some kind of a cushion to the market.
Yes, absolutely.
But to almost counter that, we are now seeing the domestic institutions now more active.
But that was always going to happen. I think I don't know how it happens, but it always tends to be the case when FPIs are buying, DIs are seller, and when DIs are buying, FPIs are seller. So that has been the cat and mouse game forever in the Indian markets. But clearly at this point of time, overall trend does remain to be in favor of the bulls, and maybe today is just one of those days when you see a little bit of profit booking. That said, let's quickly move on to some of the stocks that were on our radar today.
Well, starting with UPL, good set of numbers there, very, very strong numbers.
Yeah.
And the interesting part is that the numbers have been, the strength has been there across all geographies. India was slightly lower, but other than that, if you look at all the global geographies, the numbers, the growth in revenue was pretty strong. And the interesting part, CJ, is that in Europe, where actually the euro has weakened, despite that, the company was able to improve its operating profit margin. So volume growth, realizations, everything pretty much strong, and more importantly, the company has now raised revenue and EBITDA guidance for FY23. Revenue guidance now is at between 12 to 15% growth. That's what the company has guided for, and EBITDA guidance is between 15 to 80%. And then it's not really surprising that you have a host of brokerages who have turned bullish on the stock and also upgraded their earnings estimate for UPL.
I think the guidance really took me by surprise, given the fact that, if you look at it from a sequential basis, the earnings momentum has actually slowed down quite sharply. If you look at the top line as well as the bottom line, I think there has been a sequential decline on both those fronts. And of course, the worrying aspect is the India business. Clearly, that was below a few of the analysts' expectations in terms of the revenue that the company has made in the June quarter in the India business, and I expect that to continue probably in the second quarter as well, given the fact that sowing season this time around has not been as spectacular as probably a lot of people were expecting, given the fact that we have had normal monsoons now. We are running in surplus across major regions within the country. So clearly, despite monsoon picking up, sowing has not picked up so far, and I think that could feed into another weak quarter for the India business going ahead. So, but overall, I think given that it is in the agrochemical space, UPL anyway has been a very strong story over the past 1 year, also benefiting from the recent acquisitions that it has made the multi-billion-dollar acquisitions that it has made over the past few years. So clearly, the momentum looks good. The only concern is, of course, what happens on the margins front, because sequentially margins have also gone down, and what happens to the India business. I think that could probably taper optimism a little bit going ahead for me, Santo.
Well, sequentially, this is typically a weaker quarter for UPL. So that
possibly, that could explain that.
That could explain the weakness.
And I think the March quarter traditionally is a very strong quarter for agrochemical companies. So maybe the base effect.
Yes, and given the fact that at this point you're seeing very strong agro commodity prices, it's evident that probably the company is in a much better position to command prices.
Well, that's it. Moving on to my first pick of the day, and it is probably one of the most underrated compounding stories on the last street. Yes, I'm talking about Saregama in India. A very, very strong earnings for the first quarter, led by its TV and film business. Of course, the music business has always been a strength, but clearly the dominant factor this time around was the film and TV business. Overall, I mean, yes, margins were a little bit of a disappointment. If you look at it from a year-on-year perspective, margins have contracted. But I think overall, the growth story here still remains quite intact. I mean, the music business is expected to do even better going ahead now with the the increase in sales of Caravan, music boxes that the company sells, along with the streaming income, which has of course always been the strength of Saregama for the past 5-6 years now. And I think overall, also Santo, I think the company is heading in the right direction in monetizing a lot of the rights that it owns to many music, as well as films and OTT shows that it is getting into. So overall, a very good, very strong compounding story. I think available also in a at a very reasonable valuation in my point of view.
Well, I mean, a fantastic compounding story there, CJ, no doubt about it. I mean, over the last 10 years, in case you've been still holding the shares for the last 10 years,
10 years,
had you bought it at around when the stock was
40 level, I think.
Not around 60 level.
Split. I mean, if you adjust for split, probably around 40-50 level.
No, CJ, that's where you're mistaken. It was available for 6 rupees, split adjusted back in 2012. So 6 to 417, just calculated. It's almost nearly a 70 times jump.
Actually, I was mistaking it for 5 year ago price when it was around 40. So clearly, it has. I mean, it's been a spectacular story.
That said,
and not that much talked about also in the market. Not a lot of people talk about it.
But now, that brings me to the other part that, is the story now beginning to get so well known? And once that happens, you see the stock price performance kind of tapering off. Now, this year the stock has clearly been an underperformer, and on the charts, I mean, nothing against the fundamentals, but if you look at the stock on the charts, it's been continuously making lower highs now. It peaked around Jan, and then March again it climbed up a bit, fell, April again. Now I think it's again come back to close to about April levels, but purely from a technical point of view, I think the stock is not on a very firm wicket.
I think Santo investors probably will ignore the technical issues at this point of time on the chart. I would expect that, yes, given the spectacular run, there will always be a set of investors who would want to take some profit away, because you always want to realize your profits. You don't always want to keep them on paper. But maybe this will give entry opportunity to a lot of other set of investors who have missed out on this growth story, because I think the runway for growth for Saregama is nowhere near complete.
Well, third stock on a watch list this afternoon is Exide. CJ, I was thinking that probably this stock would come from you, considering that it's one of the plays on the EV industry. Well, for the quarter, Exide came out with a strong set of numbers. It has three main verticals, which is the automotive segment, industrial, as well as export. And according to the company, all three segments have done pretty well, and that explains the big jump in top line growth. Of course, on the margin front, like most other companies, Exide too has been in a spot of bother, but no taking away from the overall good set of numbers there. And more importantly, Exide now is a play on the growing demand for batteries for electric vehicles. This led to many brokerages turning bullish on the stock. Now, company is planning to set up plant for manufacturing lithium-ion batteries in Karnataka, and during the latest update to analysts, the company said that the plans were going on quite on track. It's bought about 80 acres of land in Karnataka. JPMorgan and IIFL are among the broking houses which are bullish on the stock. JPMorgan has a price target of about 210 rupees, while IIFL has set a target of 227 rupees for the stock. Now, in the JPMorgan report, it says that demand for acid batteries, that is going to be in the low single digits going forward, but you could see as much as a 30x jump in demand for lithium-ion batteries. So that is where the big play is, CJ.
Well, Santo, this is of course a point aside from Exide Industries, but within the EV space, the major debate right now is whether lithium-ion will be the the battery of choice, or whether we will probably move towards fuel cell technology or hydrogen fuel cell technology. I think the major development that is happening in the fuel cell space could probably make lithium-ion batteries redundant after a point of time. So I think this will be a very interesting space to watch in general, because yes, right now investors are going gung-ho after lithium-ion manufacturers, be it in India or abroad. But if fuel cell technology develops at a fast pace and also is more cost effective, then you could see a very, very good competition coming in from that space as well. So I think that is why I would probably be a little guarded in my optimism for a lot of EV battery manufacturers out there. Coming back to Exide in particular, I think, of course, you can't take away, you can't fault much on the earnings side. Clearly, the company's performance has been quite good. Yes, margins are a concern, but I think if you look at what analysts have to say, I think they believe that margin improvement should happen from the coming quarters because raw material prices are now in their favor instead of being a needle in their foot. Apart from that, the only issue for me would be on the technical side. Clearly, the stock has been facing a lot of resistance at that 158 level. This is also incidentally the stock's 200-day moving average. So it will be very important to see whether if a long-term trend is starting here. If the stock makes a breakout, well and good. But if it doesn't, then I could expect it to come under some bit more profit booking going ahead. And I think the major chunk of profit booking is coming from institutional investors at home, because domestic mutual funds have been net sellers of the stock in the past 2 quarters. So clearly they are taking profits on the stock, while probably FPIs are the one who have been buying the stock in the June quarter. So interesting stock to keep an eye out on. Especially in the battery space, because this is one stock that has been probably more inexpensive than the others out there because of course legacy issues with the company, the promoter, etc. Let's see how it develops. One stock, of course, where there are no legacy issues, and I mean the stock was flying high like a kite today, was Navneet Education. What a big bang earnings set from the company for the June quarter. I mean, across the board, if you look at sales, EBITDA margin, net profit, you have seen double-digit growth on a year-on-year basis. And the guidance also was quite spectacular. Almost 1,600 crores of sales is what the company is guiding towards for FY23 at a margin of about 20 to 21%. So clearly a very healthy outlook there. And I think one key trigger that the company is awaiting for itself is Santo, the new education policy, because under that a lot of school curriculum needs to be changed towards the end of this year. So once that kicks in, then you could have another trigger for a new sales growth momentum coming up for the company. So clearly the macro and the micro is looking quite good for Navneet Education, and of course the valuation are definitely in favor of investors at this point of time, given the stock has not been a great compounder over the past 2-3 years.
Well, on fundamental grounds, nothing really to pick against the stock. It's been a blowout June quarter after many quarters of just about sideways to flattish growth in top line. You've seen June really break out. Now again, the argument is on technical factors. Let's see if the stock can break past the 120 level, where it has been facing resistance in the past. That's what Absolutely. I would look at
I think point. The breakout along with volumes would be a very, very good sign that the stock has more legs going ahead, given today's gains that we have seen.
Well, Varun Beverages, the last stock on our watch list this afternoon. Good set of first quarter numbers there, and this comes on the back of strong performance in the fourth quarter as well. Now, typically summers always work very well for companies like Varun Beverages.
And also this is no ordinary summer. This was a very extraordinary summer in terms of course heat as well as the reopening of the economy.
So according to Kotak Institutional Equities, its expansion in distribution network, it now covers close to about 3 million retail outlets, and also the market share gains. Its products have been doing quite well. The recently launched Sting also, besides Tropicana, consistently has been doing well for it, and that could drive double-digit volume growth in the quarters ahead. And the brokerages which are bullish on Varun Beverages at this stage are Kotak Equities, CLSA and IIFL, all of which have increased their EPS estimates for the company.
Well, Santo, of course, not many holes to pick from Varun Beverages Q1 earnings. My only concern would be the fact that the stock has had a very strong run this year. I mean, probably on the expectation
50% up already.
On the expectation, of course, of very strong Q4 and Q1. It's not just that the Q1 is good. Even Q4 was good, even though it was partially affected by the third wave of the pandemic. But I think going ahead, you could expect the earnings momentum to continue, but I would expect some bit of depression on the valuation multiple, given that probably stock has already priced in a lot of the growth that the company might see in FY23. Now investor attention will shift towards FY24 and whether the pent-up demand sustains going ahead or not. So I think for me, probably the best has been had. So maybe making new entry at these current levels might not be the best strategy going ahead.
Well, let's have a quick look at the market. The Nifty at this point in time is up 56 points. CJ.
Yeah, I think
dramatic comeback, and Sensex is now up 267 points. So very volatile market.
Yeah, I
today,
mean,
CJ.
I think, Santo, this is a very good sign of the sort of bullish momentum that we have. When you see the market being red throughout the session, and then towards the end, you see a major, buying coming in. And I think probably this is a 3 o'clock move that is happening from foreign ETFs. I think this move buying probably would be led by ETFs because they're buying it closer to the closing bell in order to match the price as much as possible. So I think this is a very, very good sign for me, Santo, that the momentum right now is firmly in the favor of the bulls, and taking bearish positions on this market could be a very risky business for me. I think if you look at the other segments of the market, clearly small caps are still underperforming, the mid caps are still underperforming, down about 0.6% for the Nifty mid cap 100, down about 0.4 for the Nifty small cap 100. And surprisingly, Santo, VIX has turned into the red. Another sign that bulls have picked up the baton at this point of time, because the VIX was firmly in the green territory when we were going live. So clearly, it seems like a very, very good day, for at least a very good end for the bulls, while the day probably belongs to the bears on the broader market.
Well, CJ, so which are the big earnings that are coming up which we need to keep a track on, and also Santo, any other macro data?
Well, from the Nifty, we have Britannia Industries, which will be declaring their first quarter earnings tomorrow. And from, of course, the non-Nifty pack, we have GAIL India and Dabur India also coming out with their Q1 earnings. So these will be 3 important earnings to track tomorrow.
Well, CJ, as far as this FMCG goes, it's been a bit of a surprise because most investors were hoping to see some kind of, or rather fearing that there would be some kind of earnings compression.
I think, Santo, margins, of course, the story is probably played out in similar lines in terms of the contraction that we have seen. But the commentary, I think, has been a little better. I think a lot of people are now expecting that maybe post second quarter, with raw material prices now coming down quite substantially, you could see margins improving from here on. But the big question mark, Santo, remains demand, and especially the rural demand. The commentary on rural demand has not been that great so far. We still have Marico and Dabur to come. I think these two companies will also provide more insight into how the demand in rural areas is developing. Britannia too. 3 companies which have a lot of presence in the rural market, because HUL's commentary around rural demand was not really that heartening. And of course, if you look at the latest Nielsen report that has come out for the FMCG space, they have also shown that rural demand was down about 2% on a year-on-year basis in the June quarter. So clearly, I think demand remains now the big focus area, given that margin is something that probably will improve going ahead for me. Well, Santo, talking of the economic front, I think the US non-manufacturing PMI data for July will come out later in the evening. I think it will be an important data to track, of course, ahead of the Friday's numbers. Friday jobs data will probably also come out for the month of July. So it will be a very interesting way to look at how the US rate hike outlook develops from here. Yesterday, we had a lot of Fed members categorically saying that no, we are way far ahead or far behind where the levels we need to bring down inflation, while the market is totally preparing itself for a rate cut next year. So let's see how that develops, and these will be the few things to watch out for.
Well, with that, it's a wrap on this edition of Market with Santo and CJ. Thanks for watching, and please do share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live tomorrow morning at 9 a.m.